So welcome to Unify Project Controls training. This is the second session, so part 2 of the training. And last week we covered setting up our project, and this week we're covering managing that project. So just a bit of a quick recap. So last week we set up a project and a contract. We set up our work breakdown structure. We assigned our resources. We used that to generate an estimate of the fee. We scheduled that effort and that cash flow to understand what was happening when and when we were going to get paid. We set up earned value such that we can progress that and measure that as the project progresses. And we reviewed our resource plan. So today, in this session, we're going to look at then managing this project now that it's live. So the first thing is, hooray, we won the job. And what does that mean in terms of, agreed revenue and how do we capture that? Then reviewing the, margin and or profit that we're getting from the job. Managing our deliverables. What happens with timesheets, earned value, invoicing, forecasting, and finally, variations. So let's go back to all of this and then declare hooray, we've won the job. And what does that mean? So just as a bit of a prelude to that, I'm just bringing this up here for a different project and contract that I have set up here. And this is what we're working towards in this session. So we can see here, this graph here showing the performance of this contract over time. And what we can see here that, phased over the last, however many months, we have our actual costs, so the time that we've poured into that. So that's our, the cost, the base rate cost based on the cost of our resources timesheeting to the project. The planned cost to date, so what would be expected to have done by this time, and as you can see, this one is well under that. The earned, so how much of this effort have we earned, and then our cost performance index and schedule performance index. And what we can see from this particular project here, that a lot of effort was put into it during July and August. And there was a lot of planned effort to happen in September and October that has not happened. And as a result, what we can see is this project is actually performing well financially, as in we have, achieved slightly more than we had planned to achieve for our actual costs. So our earned value is above our actual cost, but it is well behind in schedule. And I think the situation here could be that this project has been put off or delayed and it hasn't been reforecast to take into account for that. That would be a reasonable thing to assume from this without knowing the gory details. But, we can see that there was a whole lot of effort not done in September, and that is pointing to this significant delay here. It's, this is telling me it's 50% behind schedule based on the effort that's happening. So, getting back to agreed revenue. So here we are. If I go back to the dashboard in this particular project here. So my project is the largest cake decorating facility in the Southern Hemisphere that we set up last week. And when I scroll down and drill into my engineering design services contract to view my work breakdown structure, there it is. And we've reached the point now where, this went into a proposal, it went to our client or as part of a tender process or wherever it was, and we have now won the job. And in coming back to that, we've confirmed the total price of the job. Now, this is obviously only for a section of the project because we've only priced up a section of the estimate last week. We haven't gone to the gory detail on the rest of it, but that's okay. And what we want to do is status that in Unify to say this is what the job was worth when it was awarded to us. And we do that by capturing that in a document. So if I click on new, so I'm in the contracts module, drilled into my contract in the value view. And if I select new document, this is going to launch this new create new document wizard. And there's a whole bunch of documents available to us. And these are all documents that use the contract data from this screen. So primarily the contract deliverables. And I'm just going to use this one here called contract acceptance. Now, this is just an example of a way to do this process. There are other ways to do it as well. And this is telling me it's to be signed off by the project manager, which is myself. So that's great. So I hit create, and I'm into these steps here for to create this. This is a very simple document. The first step, which is to document the agreed fee. So here is the details of the agreed fee totaling 43,000, which is also down the bottom here. So it's listing all the deliverables. And of course, if I had populated the resource plan or the resource-based estimate for all of the deliverables in this work breakdown structure, it would be much higher than this and go into all of that detail. But we're just capturing what we did last week here. And the idea is we're statusing it as at today. This is the fee that's been accepted by the client. That's what we're achieving here. So you have that in the system. So it's very simple. That we just make sure we've got the right contract selected, which we do, and review this. We're happy with that and click on save and continue down the bottom, which takes us to the next step. And you'll see here, this says record of acceptance. And with this, we can attach a file, and that file would be the letter or email or other record that the client has accepted your offer. So it's the whole thing of contracting, there's offer and acceptance. We have sent them an offer, they have accepted it. If this is an email, you can actually save this in from Unify using the, if I just come across here, the save to Unify and either new document or append to document function. So I can save from Outlook using the Unify add-in. This, say it was an email, I could save it directly into this. I'm just going to, attach something here. Let's say this is the document that it was. This could be the signed page of the contract. But what we're capturing here is something a bit ahead of the contract. It's just the acceptance of the offer. If this is a large design contract, you'd expect the final signing of the contract to happen later on, and you would obviously want a record of that. The other thing we can do here is use this information to actually create a contract. So you can have steps that have the wording of the contract, and you can build it up and take it from there. But the important thing is to have a record of that acceptance. We go to the finish step, and I'm now going to put that to awaiting sign off. And when I view that document, here it is. So this is just a summary here of my agreed fee, the contract it's against, total of 43,000. There's my record of that acceptance from the client, of which I've just uploaded one of our training manuals as an example of doing that. And now I will add my signature to it, and that is now signed off and has created a record as at today that our fee on this project has been accepted. And that has done a couple of things. If I go back now to the contracts module and scroll down, and if I just hide the charts for the moment, the status of this contract is now active. Previously, it was pending. So that's changed automatically. And this has now captured this 43,000 as the original contract value here. Previously, it was a pending contract value. When I drill into the contract and go to the details view, the status of the contract here is now active. And in the value view, the status of all of these deliverables in my work breakdown structure is also active. So it's updated all of this to be an active contract. That's now live. So that is fairly straightforward, and it's just a bit of a QA process to say, you know, this is how we're recording this. And that, you know, captures our contract acceptance. So what we want to do now is review the margin on this project. So there's a number of ways we can review margin and profit, but I'm going to show you one of these in Unify. And I'm going into the menu, going to reporting and reports, and I've just opened that in a new tab. I'm going into profitability, and as you can see, there's a whole lot of profitability reports here, which all have their own perspective on the world. But the one I'm going to look at today is this project analysis report. And I'm going to run this for the current month. And I'm running it based on a role, and the role is project manager, and the person assigned into that resource is myself. So this is going to show me information on the projects that I'm in the role of project manager. So it's my projects that I'm managing. So here we are, based on projects that have had activity in this time period. So this date filter here, where I accept the current month, it's only going to show me projects that are active in that time period. If I was to say change it to current financial year and hit view, I think I would get some more projects. Yes, so I get a few projects here, but let's just put it back to the current month so I can focus on the project we're talking about today. Now, the first thing to notice here is, and I'll just zoom in a little more for this, so this is a bit more visible. So here's the project of the largest cake decorating facility in the Southern Hemisphere, important work. We have this agreed revenue amount of that 43,000. Now that agreed revenue comes from doing that contract acceptance document that said this was the agreed fee for this project. And the fee may change in the future. And if it does change, that change will be picked up in the forecast final revenue, which we will look at later on in this session. Then we have invoice to date, which is currently nil. And then we have something interesting here, which is forecast cost at completion, which is $51,000. So we have a bit of a problem here in that this project is going to cost more than the fee. So that's a bit of a red flag, and we've got to understand what's happening with that. Then we have our actual cost to date. So this is based on the timesheets that have been done to date. And already we've spent 30 grand, which again is interesting. Now, the system Unify here is calculating a percentage complete. So what it's doing here with this percentage complete, and this is just one methodology that we use in this particular report. There are other methodologies for doing this that we will look at within the contracts module. So this percentage complete is the actual cost to date divided by the forecast cost at completion. So it's taking those two things and saying, you know, of the work you say you are going to do, how much of it have you done? And that's your percentage complete. So it's saying we are 59% complete. So that's an interesting number. We might look at that again. And then from that, it's calculating an earned value. So a total revenue earned to date. It's saying 59% of the fee is 43,000. So, sorry. Yes.
How the program knows how many percentage have been completed? It's as per project's program. Yeah, it's according on date.
So this isn't something we're telling it. This is something the system is calculating. So it's saying your cost to date divided by your total cost at completion. So this is your total effort That's your effort to date.
Okay, I understand. Thank you.
So that gives you the percentage complete. And then this number here is the forecast final fee multiplied by the 59% to say this is how much of the fee you have earned to date. So we can see here there's a problem. Our actual cost to date is 30 grand, almost 31, and our revenue earned to date is only 25 grand. So that's a problem. Now, the WIP here, which is your work in progress, is your earned amount less what you have invoiced to date. So right now, we haven't invoiced anything. So this WIP is, the whole amount that we're carrying. Profit margin to date is based on what you have invoiced to date. So there isn't a profit margin to date because we haven't invoiced anything yet. And forecast profit margin is where we're going to end up. And we are currently forecasting to go over our revenue in our costs. So this project, even though we've just started it a few weeks in, we're already looking at a margin of negative 20%. So we have a problem here. You would hope at the start of a job, you would have a nice healthy margin, and that would improve over time. I'll just expand this out to more projects to see whether we get a different perspective on any other projects here. So the first project we have here, the restaurant at the end of the universe, this one is interesting because this says that the profit margin to date is negative 14%. So that's saying the cost to date of 20 grand versus invoice to date of 18 grand means we haven't invoiced all of our cost to date. We've invoiced less than the costs, but our forecast margin is 32%. So, I would look at this and say, unless we are waiting on a major invoicing milestone, so we expect to be going into the negative while we're waiting for that milestone, then that forecast profit margin is perhaps a little ambitious. You tend to, as a project goes along, unless things change dramatically, like for instance, you may have all the effort front loaded, but you then may have milestones for which there's very little effort that you invoice for later on. So unless you're expecting something like that, you wouldn't expect your forecast profit margin to change much from your profit margin to date without you doing something dramatic to get it there. So and likewise, this is an even bigger turnaround here of negative 94% versus a 91% profit margin. And again, that could, you would expect that as, a little, I wouldn't expect a profit margin to turn around that dramatically in either of those cases. So this particular project analysis report, which just to recap is in the reports module under profitability reports and project analysis. So this is giving you some analysis here on what's happening on the project. Now, it also gives you some more stuff here based on the period you select. So I've selected current financial year. What have you invoiced in the period? What have been your costs in the period, profit and margin in the period? And then the contract backlog, which is here looking at what you're yet to invoice. An awarded backlog is what you're waiting on getting approved in terms of variations to give you the backlog you've got of on that particular project.
Sorry, Simon, I have a question. So, but what is the reason for margin to be negative? I never had it in my report, so I just don't understand.
So the margin here is negative because the costs to date are either
because we
higher than what we have invoiced to date.
Okay, I understand. Thanks.
Yep.
So it's kind of show our cash flow on the project, right?
there's cash flow data is being used for this in terms of the invoice, but this is about the status as it is today, rather than what's happening with the cash flow in the future and all the rest of it. But it's giving you basically two views of the world. Where are we today? How did we, well, three actually. Where are we today? So profit margin to date. What is our forecast at the end of the project? You know, are we going to be okay at the end of the project? And also then within the current period. So, you know, if I was to do this for the current month or for last month, I could see, did we make money or lose money last month overall? You know, you're wanting to, you know, it can give you that info. So there's a whole bunch of analysis here that you can use. So this is one view of the world with Unify. And I'll leave that report open because we'll probably come back to it. And then we'll jump back into this. So now what we're going to look at is how we manage these deliverables and how we collaborate with our project team. So back in here, in the contract, in this value view, and I'll just zoom out again slightly so this fits a little bit better. So we looked at last week about with this assign resources view here. This is how we, you know, assigned our team to a particular deliverable. But also next to it here, you'll notice there's this little comments box. When I drill into this, I get another view of this deliverable. So as a project manager, I'm reviewing what's happening here. I can see here this summary of here are the actual hours that have been done to date in timesheets, and we're going to look at timesheets shortly. Their remaining hours and total hours and what progress has happened based on that. And then we've got this comments section here. We can see no comments have been made for this deliverable. But I'm looking at this going that, you know, Rory and Grace are both saying that they've got you know, they're not going to be using up their full hours, and Bill is asking for extra hours on this particular project. So I'm just going to throw that comment in here. And that's there. And then the other people who are assigned to this particular deliverable, or, you know, it's basically treating this deliverable as a task, can then comment on that as well. And we can have a thread here collaborating around this. You know, is there a problem with this? Why the change in hours? Are you picking up someone else's hours? What's happening? And we can look at that. So I'm just going to drill into the other one as well. And a whole lot of people are suddenly getting this, you know, variance here of saying that they're going to use more hours. So I can see, you know, Rory is saying total contract hours of 88, total hours of 88 versus, you know, 60 hours and so on. So, you know, I can say here, aside from my horrendous spelling here and typing. So I'm just throwing a comment in here to them to basically ask, you know, why these extra hours? What's going on? And also letting them know that, again, there's another typo, I'll just fix that, that I've got some stuff brewing as the PM because there's more requests for work coming from the client that I'm expecting to, you know, include into a variation. So I don't want them forecasting work that's going to be for this variation here against this, doing this design. So it's me saying to them, look, has what we're doing changed? Yes, there's been something over here that's going to be a variation. I'll forecast that, but I don't want to double count those hours into here. What's happening? And again,
Simon,
yes,
where do I go to open this page?
So I'm in the, so if I go back to the contracts module and I've drilled into my contract in the value view and against each deliverable. So I've gone down to my master plan design one. I go all the way across and there is a link here to comments. So that's giving me a view of what's happening with this deliverable. In this case, it's a master plan design deliverable. And I can comment and collaborate with the team.
I don't see the value button. Can you go back, please?
So what I would hope to get now back from the project team are their comments around this, you know, an update on what they're doing, why they have, you know, said it's going to take more hours. And then that can feed, you know, back to me as the project manager to understand that, you know, are we double counting these hours against a potential variation, or did we massively underestimate the work required to do the master plan design? Or as may be happening, they are forgetting that they're going to roll off the master plan design and onto the, you know, concept design in 2 weeks' time. So they shouldn't be forecasting their concept design hours against their master plan design task, because that's double counting as well. So it's just me wanting clarification for them to say, you've said this, why have you said this? Please explain. So I need to get to the bottom of why this project is looking like it's gone off the rails. Now, what we then want to do is understand how this is coming from timesheets. So let's have a look at someone's timesheet. So I'm going to go to the timesheets module. Now, you won't be able to do this because you don't have administrator access. So what I've got here is, and I might go to Bill's timesheet. There we are. So this is the timesheet view that my design team gets. So when I'm one of the people assigned, so in this case, you know, Amy, Astrid, Bill, Rory, and so on, when I'm one of those people assigned to that particular task and I go to my timesheet, this is what I get. I can see here that, and this is the last week's timesheet for Bill, that, you know, I've got these tasks assigned to me. There's the project I'm assigned to. Here are the tasks I'm assigned to. Here's their scheduled end date. So we know this is going to be completed by the end of next week. And this is my timesheet for, well, this is Bill's timesheet for last week. And what we get is, you know, the total for the week here, the actual hours that they've done on this. And what they're able to do is then put in their remaining hours. So when they get to, you know, at the end of, I'm Bill, at the end of last week, I've done this work, I can look at it and say, I've got another 20 hours to do on the master plan design. That's my estimate of what I've been told. It's going to take me 20 hours. I'm going to spend half of next week working on this to get it finished. And that then totals up to a total hours of 88 hours against the scheduled hours, which comes from the contract, of 60 hours. So that's what's telling me that we've got this variance here of 28. So once Bill has done that, we hit submit. Yes, we're submitting those hours. And there, that's the hours for last week done. And then when I roll forward, I've got my tasks for this week here. And if they come onto another project, they can click add. They'll get a list of all the projects that they're assigned to at the moment. So let's say that they're also working on the beachside cafe. And when they come into that, we can see that here are the tasks they're assigned to for this particular project. And here are the dates that those tasks are happening. So that's a bit of a guide to them to say, oh, it's the 17th of November, you know, all these tasks predate that. So that's, you know, I mean, it may be that they're doing them and that these dates are, you know, now, you know, redundant, but at least it's telling them something. You know, why am I doing a task that was supposed to be done, you know, last month? What we're doing here is feeding this information through to the people who are doing the work as they're doing their timesheet, because that may prompt them to have a conversation to say, you're saying this work was supposed to be done by the end of November, but it's, you know, it's not going to be done until the end of December. You do realize that, don't you? Or for them to look at it and go, you've asked me to do this within, you know, 5 hours. It typically takes 12. And they can feed that through. They can put comments in here to that end. There's all sorts of stuff that can happen that allows just someone entering their timesheet to provide useful information back up through to their design lead, the project manager, the project controls lead, whoever it is that's going to be looking at this information, and allowing us to collaborate. So Unify is a system that's designed to do aggregation of data and also distributed data. So this is the distributed data. We are, from what we have set up in the contract, we are informing the timesheet users of this information. So the timesheet has become a communication tool to them, as well as being a tool where we just capture their time. You know, we're recording their data. We're doing more than that. We're informing them about what's happening on the project as well. And we're also letting them inform us, because, you know, the best data you get from people is from their timesheet. So in addition to for them to put a comment against it, we are allowing them to provide an estimate of what their remaining hours are on that task. Now, we don't have to stick to that estimate. We can override it because I'm the project manager. It's my project. I have, you know, more control over it than they do, but they can give us that estimate. I can say it's wrong, or I can go, that's interesting. I better talk to them about it. Or I better comment against the deliverable and get their comment back to understand why. So it's about distributed data and then aggregated data and collaboration, and doing that using the timesheets in Unify as a platform for doing that. So that's what's happening there with the timesheet. So all that setup we did last week is, in addition to helping us manage the project, it is communicating information about the project and the tasks and the deliverables to the people who are doing the work through their timesheet. And this is something that's unique to Unify. So now we're going to look at earned value. How have we progressed? Where are we at? And what measurement does that give us? So to go back to this project analysis report, this has given us one measure of earned value, which is for our largest cake decorating facility, is oh, you'll notice that percentage complete has just changed. That's because I submitted Bill's timesheet. So we got an up-to-date record of our actuals. So it's changed to 61% from 59%. And the actuals have gone up slightly accordingly. I think they were 30,000, now they're close to 32. So this percentage complete here and this total revenue earned to date is one measurement of earned value and one methodology for doing it, which I've already gone through and explained. We have another one in the project, in the contract. So again, I'm in contracts in my project. I drill into the contract and go to the earned value view. Now, last week, we assigned the engineering design stage gate to this project. And what that does is gives us a series of milestones that we work through to achieve and to measure our earned value based on what we have achieved. So, and this is designed to suit your processes. So it's designed to reflect the process you're going through. And what I can see here, if I look at this column here, is we have here's our, WBS and our deliverables. There's the stage gate grouping we're using. And I can see here are the current milestones. So the master plan report is at issued for review, and the master plan design is a draft. Now, both of those have been completed at 100%, so I can move them on to the next one. So this one's at internal review, and this one is now at issued for review. And let's say the internal review is 20% complete as at today's date, and this issued for review is 40% complete as at today's date. And I hit save, and that records that. Now, over on the right here, I can then drill in to see the whole history of these. So what we've got here is when we have achieved particular milestones. So here we are. So internal review complete as at today. And here's when we, issued for review, that's come back. When did we, we set it up at the end of October, and we've hit these milestones along the way. That's for the master plan report. And then there we are. That's what we've achieved for the master plan design. So we can track how this has been progressing. And if I turn the charts back on, that reflects up here, right? So where are we at? We've got 31,000 in actual cost, and we have earned 20,000. So now we've got, so that earned value is based on this here. So as we assign the milestone that we have achieved on a particular date, Unify then calculates the overall percentage that that's based on, and then that percentage is a value of the overall cost. So this one here of 19,000 is what we have earned in terms of our cost, as opposed to this view here, which is what we have earned in terms of our fee. Now you'll see the cost today is the same, 31,860, 31,860, but this is looking at a cost view of the world. What is it costing you? So they're two different types of earned value, one based on cost and one based on fees. So what does this tell us about this project? Well, for a start, we can see here that we had costs that we incurred in October, but there was no planned cost in October. So we managed to start the project a little earlier. Maybe we had a good word from the client that we were going to be awarded it and we could get cracking on it before actually having it formally awarded. And then thus far in November, here's our planned costs, and here's been our actual costs, and they have gone way above our planned costs. And what we have earned, so what we've achieved of that, is only a fraction of the actual cost. So this cost performance index is just a measure of that. So if that's below 1, things are not going well. It's costing us more than we expected. However, the schedule performance index means we're getting the work done sooner than we expected. So we had planned to only spend 11,000 to date. We may have spent more, but we have achieved more. And this is looking at the earned versus the planned here. So we have achieved more than we had planned to. So we're ahead of schedule, and that's good. But we are running over, and that isn't good. So that's how we measure and update earned value on the project. And that's typically something you do weekly. So I'll just go back into this. So, I would expect at the end of each week or the start of each week, or when you hit particular milestones, your project manager or project controls person will be coming in and updating what milestone is it, what have you achieved, and that gives you, this value of achieving earned value over time, which we're seeing graphed up here in our contract performance. So we've reached some milestones. That means we can invoice. So to do that, I go to the invoice view. Now, there's a few things we can do here. So first of all, here we're looking at this. Here's 0, 0, 0, 0, and 43 to complete. And you'll notice there's a percentage complete view here. All right, so there's another view of what our percentage complete is. So go back to here, earned value. That tells us we have a percentage complete against master planning of 67.5. This project analysis report is telling us it's only 61, right? We are then going to be putting in to the invoice view another percentage complete value here on what we can claim against this project. And that may be different again. And each of that, it's not that any of these are incorrect. It's just that your percentage complete is it's a triangulation of where you're at. And if you've got two things that are analyzing the same data to tell you something slightly different, well, the reason is it's different analysis, and that analysis can inform you, in different ways. So if I'm looking at, this one here, that's saying 61%, and my earned value here is saying it's 67%, I would be questioning to say, well, is this right? This is higher, 10% higher than the other measure. Is there a good reason for that? And there might be a good reason. This might be perfectly valid, and this method is under-reporting. And that's fine, because that's just a different methodology. And it may be that one's over-reporting and one's under-reporting, and the truth is somewhere in the middle. And that's fine too, because as I said, this is a triangulation. This is to help you understand where you are at on the project. And the point of doing it is to pick up problems early such that you can address them, and that, such that we don't lose money on this project. Because remember, as per this report here, we're going to, be down 20% in our margin here, which is obviously not good. But we do need to invoice. So back to the invoice view. When I scroll down here, so here are my deliverables and the amount I can, invoice here against this. When I scroll down, all the way down to the bottom, I get this view here. And what this is doing is summarizing the time that is being booked to this project. Now, we've got a period filter here with these dates, and the period is typically from when you last invoiced. So if I invoiced last week, this would only be showing a week's worth of data, but I can change the period, accordingly. At the moment, we haven't invoiced on this project, so the period start here is blank, but the default is when I last invoiced, so it's blank because I haven't invoiced. So I can see here, here's this same cost to date. So that's based on the rates, the cost rates assigned to these resources. Here's what they're doing against their particular tasks and how they're performing. You'll see this is all the same data that we've looked at when we drilled in and looked at the deliverables. So this is just another view, and it gives us cost to date here. So same cost to date. And there's a button here, which is claim time. And what I'm going to do is I'm going to click on that. And when I scroll up to the top now, we will see that there is time claimed against each of the line items here. So what it has done, it's taken the hours that people have entered into their timesheet and put that against the claim quantity column. In this case, it's just a starting point for me to say, can I claim all this time? Because if I'm claiming all this time, then I'm billing all my WIP, which is a good thing. I'm not carrying any WIP. However, on this particular project, we're yet to have achieved, our full master plan report and master plan design. And even though we're at this, 67% complete point, our agreement with the client says that we can have one point where we bill 50% of the work. So that's what I can do. So if I put 50% in here against this deliverable and 50% against this deliverable and hit save, that is going to override my claiming time. So if I could have just billed all those hours, that would be great. And in some cases you can. You're just like, here are the hours we've done. I'm billing them. That's the invoice. So if you are in a do and charge scenario with that, that claim time's fantastic. If you're not, it's still really useful to see, well, what does all this time mean in terms of, what I can claim? And, can I claim more or less than it? So here, the agreement with the client, with our schedule is that, when we've started on something, we haven't finished that milestone, we can bill 50% of it. So I can bill 50%. So I've input 50%, but I could have put it in the claim quantity, which is what the claim time button did, this claim value, or the percentage complete. So I've entered it as percentage complete. That is then calculated that to say for master planning, it's 21,000. So once I'm happy with this, I select new document and select the invoice document. This is going to create my invoice. So I select create. I give it the invoice date, which is just today's date. And then it tells me there's an error here. Right, there's something I've forgotten to do. See, this line item is missing an account code. It's all missing an account code. I've forgotten something that is vital to make this work. So I need to go back to the value view. And you'll see the code column here just has select code. It's all blank. And when I select that, I've got a series of my revenue codes that everything gets coded against. So this is engineering services. I'm just going to select engineering services for this and hit save. And do that for these ones. And there we are. So if I select it at level 1, Unify populates it down to all the levels. Now, these can be different for different deliverables and so on. But what this has done is link this contract now to my revenue codes. So when I raise my invoice, if I have an accounting integration, my invoice can just go straight through into my finance system, coded to the codes we use in the finance system. So that's what we use that for. But it's important that it's there. The invoice doesn't work without it. So,
Simon, can it be integrated with Xero?
Yes, we integrate with Xero out of the box. We have done integrations with a whole host of finance systems. So I'm just going to click on tax invoice again here to make this reload.
And
yes,
when you invoice, can it come with a progress claim, or is it two separate documents you need to create?
That depends on what your requirement is. You can do a progress claim first to indicate to the client this is what we are claiming, and then raise an invoice, or the invoice can be part of a suite of documents that you do all at once. So whatever methodology you need to raise an invoice for a project.
Yes.
So I've just refreshed this. I just clicked on the title of the step here, and it's reloaded, and that error has gone away. So that's great. And what I've got here is a layout that reflects what I have in the contract. Now, as you can see here, this is giving all of these hours and everything that we've done. And that's not necessarily what I want to show to the client. And we've got a whole lot of options here. So we can make this invoice look however we need it to look. So for instance, if I select time and material, this is going to show me billing time. Here we are. I am billing, all these hours by these people to give these values. If I change it to lump sum and put it to depth level 2, I'm only seeing, I'm claiming 50% of master plan report and 50% of master plan design. I'm going to uncheck all these other ones because I don't want to show that. So even though I have done, let's just uncheck all, save me the time. So even though I've set this up as an effort-based estimate in Unify, I am billing this to the client as a lump sum because I've turned it into a lump sum here. And I've done that in the invoice. And what that's done is if I was to take this particular view here and look at it as level 2, right? There it is, level 2. There are my lump sum amounts. So I've just done the same thing in the invoice. And now I can show and not show any of these particular columns. If you have a client who wants to see the work breakdown structure number, I can tick that and it will show. I can show or not show any of these. I can change the description. That says agreed revenue. If they like to say agreed fee, it can say agreed fee. Whatever it might be. These can all be changed in the invoice to suit what you need to produce for the client, or you can use one of the other layouts and select the columns you need. It's very flexible to give you an invoice that will meet your client's needs, as well as meeting yours. Scroll down the bottom, here's the total amount, GST and all the rest. Save and continue. I've got an option here with a step to attach any disbursements receipts. So if I was on charging disbursements, which I'm not doing in this case, I could do that here. You'll see that with this show step, that's hidden. So it's not going to appear in the document. If I was to use this, I just unhide it. Save and continue. I've got the option here of using a distribution list. I'm not going to do that. I'll just leave that hidden. And then I get to the final step and I change this to awaiting sign off. I'll just rename it here, Invoice November 2021. We can have the invoice name here populate automatically as well. And I click on View Document, and here is my invoice. So I can now look at that and say, is that right? Yeah, we're billing them 21 grand plus the GST is 23, nearly 27. That's all good. There's our bank account details, so they can pay us when we send it to them. I'm happy with that. I hit Add Signature. That's now generated my invoice number. And if I click on the Share button, I can email that to my client, who is Clive. Bang. Always run the spell check over that because I do not rely on my typing to get the spelling right. So there we are. I click send, and that has sent that email with the invoice attached to the client. So I know I have sent that invoice out. So I can close those. So that's how easy it is to invoice in Unify. So all that work we did setting everything up makes invoicing really, really straightforward. So now that we've done that, actually, before I come back to this, what I'm just going to do is review this project analysis report again. So here we are. We can see we have invoiced. We've now got profit margin to date, minus 48%. That's not good. So even though our forecast profit is minus 21, our profit margin to date, that's really not good. And so I just clicked on the wrong thing there. But the other thing that's happened is the WIP that we're carrying has reduced. So yes, and I know all the projects are negative. This is reflecting very poorly on me as a project manager here. These projects are performing quite badly. The advantage of that, it gives me something to talk about in these training sessions. How are we going to fix this? If the projects are performing well, then we'd run out of things to talk about in the training session. So, you know, they're negative for a reason. But our WIP has reduced. So we're only carrying, you know, 4,700 in WIP. So that's gone down. So, you know, it's still good to get an invoice out, still good to get money in the door, even though we're hemorrhaging. Cost to date here is 10 grand over what we've been able to invoice. Something's going on. I need to get to the bottom of it. So I'm now going to look at how I forecast this. So when I reforecast this project, is my situation going to improve or is it going to be worse? So back here, and I'm going to go now into this schedule view. Now, if you remember, we were here in the last session when we set up our baseline of when things were happening. But this is now updated. And what I've got here is, as well as my contract hours, I've got actual hours and I've got the remaining hours that have happened. And also, I have had my conversations with the team on what's been happening on this project and what they've been doing and what's going to be happening next with it. And through those discussions that have come out of what's happened in their timesheets and my collaboration with them through the deliverables comments to ask questions and find out what's happening, plus their feedback of the hours they're putting in against their remaining hours, is that in the meetings with the client is asking for more scope, more stuff to be done over and above what we said we would do originally. And they have included in this estimate those hours. And in fact, in some of their actual hours they've done to date, they've done work on these changes to the scope. So I'm looking at this, and our actual work towards our original master plan report and master plan design is actually well progressed and going well. So I'm going to reforecast with that, you know, that in mind. My end date here, though, has been pushed out because of this extra work that's come in. It's going to take us an extra week to finish all of this. So the first thing I'm going to do is change this, that this work isn't going to be done until the 3rd of December. So I'm going to change both of those end dates and hit save, and that should push those through down to everybody else. So there we are. That's spread the work out now over 3 weeks. That's the first thing I've done. Second thing I've done is to you know, reduce some of the forecasts that people have given me, because you know, the work that's going to be done specifically for the original scope is actually fine. It might be slightly over or slightly under, but that's okay. So Bill's saying the Bill needs another 28 hours on this particular item. And that's fine, because that's all within my original allowance for this. So I'm going to leave that with Bill. Amy's is fine as well. Rory's already done more hours than were necessary. But as it turns out, Rory's work on this one has finished. And what I've discovered is that Rory's working on these things that relate to the variations, as is Grace. Grace is also working on the variations. And when I do that, that's going to, reduce that. Now, the whole thing is still over. Now, as it turns out, Astrid hasn't done any work on this, and I'm able to reduce the estimate for Astrid's time in half. She is going to be working on it to get this original scope finished, but it's going to be at a much reduced amount. So I can see now that that's reduced the amount of time that's going to be needed. Now, this one is even more interesting. Turns out there's very little work to be done to finish this. Everyone's got about 8 hours to go. And the rest of the work that they were forecasting is all to do with design for the these variation items. So the original master plan design that we were asked to do, we have substantially achieved. Now, the whole thing is still running a bit over, but not to the extent that it was before. So all I've done here is just update some dates and some hours. And this has changed my forecast here. Now, I can see the effect of that by coming back into here, selecting view. Actually, I might just do it for the current month, such that we're just looking at the one project here. And so we can now see that this forecast cost of completion has reduced. My percentage complete value has gone up. My WIP's gone up. That's okay. Profit margin to date hasn't changed. But my forecast profit margin has improved. It's now only -4%. Now, I've done the usual, project manager thing here is I've just stripped out the hours. I've said, you're not doing those hours. That's not happening. And that's fine. But the fact is I know they are happening, and we'll get to that. But for the original scope effort, those hours are not happening. I've gone back and spoken to them and gone for the original scope. The effort involved, it looks like it was over what we said originally. We under quoted the number of hours, and we have to wear that, but it wasn't as far over as everyone was saying initially. So maybe it's going to be okay. Now, the other thing I can do too is go here to the cash flow view and to see whether anything is changing from that. If I show, actuals through to November, and, the fact is, yes, we'll still be finishing and billing the remainder of that in December. So we've built some of it, 50% of it for, so I'll just go back to October. No, actually show from November. So November's blank here at the moment because we're saying the start date for this is, the 1st of December. We have actually invoiced, and when we close the month for November, that will show as an actual. If I'd invoiced that for October, it would have been a little clearer, but it will show the 21 grand as an actual that we've invoiced for November when November month end occurs. And then the balance of it will be forecast for December. It's a bit odd at the moment because I've invoiced, halfway through the month, which would typically not happen. You'd normally invoice at the end of the month for the last month, and then that would show correctly. So there's no change to my cash flow. So even though my effort has changed, I'm not changing my cash flow here. If, it would be that, we're going to, not going to be able to build this to January, well, then I could come in here and change this forecast date to January and hit save, and it would, phase out the remaining cash flow. Hit save through to the end of January. Were that to be the case? So So yeah, so I can update my cash flow forecast as well as my effort forecast through this view, all linked to my milestones. So coming back to this particular view here in this project analysis report, we've improved the situation through our forecast, but we know that this forecast is incomplete because we know that there is extra work that has come from the client, and that initial jump in our forecast cost came from extra work that was thrown at us by the client. So we need to handle this with a variation. So to do that, I will first come to here and say, we're going to do a variation. Woohoo! Exciting. So to do my variation, I come back into the contract and go back to my value view. And I scroll down below my deliverables. I have my variations. Now, this works in the same way that the deliverables work, with some additional information to help us identify it as variations. So, you know, you can have a WBS structure for variations that you import, but I'm just going to put one in here. So this is going to be called additional master plan options. So that's what's happening. The client has come through and done additional, asked for additional master plan options. And if I scroll across to the right here, there's my little comments box. So I can click in here and click on this and say, so we've had the client ask for, you know, 5 master plan options, and our original quote said we would do 2. So what we want to do is, you know, we've done some work on these additional ones, which means that our original, you know, estimate for things has gone above what we said originally. But we don't want to do any more until we get approval from the client against this variation, that they are going to pay us to do this extra work that they have asked for. So now, what we can also do so what I'm going to do now is is an estimate of this. So I drill back up here, and like we did before, well, actually, before I go into the estimate, we'll look at some of this other information here. So we can categorize variations, right? So this list here is determined by your system administrator, which allows you to, you know, basically group variations into reasons for things. And this one I'm going to flag as client. So it's a client change essentially, but you can decide what these say. So this one's scope change and client are potentially the same thing in this case, but we're going to go with client here. We've then got this status of variation. So possible variations is when you get a whiff of something is changing or an extra request and you think it might lead to a variation. This allows you to log that, track that, put your estimate against it, see whether it happens without revealing it to the client in reporting. Pending is when you're, you know, at the point of now negotiating the variation. So that's where we are with this one. Client has asked for the work. I'm going back to them saying, you realize it will cost this. Of course, we need to code it. And it's, in this case, it's the same as the rest with engineering services. If you're tracking budgets, you can manage things to contingencies. I'm not going to do that here, so we'll just leave that one. So we'll just save this. And then I'm going to have the same thing here, which is to assign my resources. So who's working on this? Amy is, and she's going to be doing 4 hours. Astrid is, and there's 20 hours from Astrid. Bill's working on it, and it's going to be 40 hours from Bill. And Rory's going to be doing 40 hours. So is Sarah. And Grace is going to do 8 hours against it. So there we are. I've spoken to my team. We've looked at the effort. It's quite a large amount of effort because it's, you know, basically double the work we said we were going to do originally. So we hit save. I've looked at that. It's gone variation 13,000. Go back up. Look at the effort for the original master plan design, and that was 30,000. Okay, now I'm way undercooking this. And in talking to the team, it's not changing our effort for the master plan report very much, but it certainly is for the design. It's effectively double. So I've looked at this and gone, no, that's undercooking this. I want to amend those hours. So I'm going to go back into my resource view here. I'm going to have to put Clara on it, but these guys are going to be doing more hours. Let's say 20 hours there and 80 from Astrid. There we are. That's 38 grand and 436 hours. So it's 436 hours versus 296. And actually, what I haven't done is done some of the changes in the rates as well. So I'm just looking at the hours, 296 hours there versus here, 436. That's not quite double, but that's about right. Because, you know, there we were just doing a master plan design for 2 options. We're now doing 3 more. So it's, yeah, it's probably overcooked. So I'm going to shave it back a little bit. Take those back. And of course, you know, this can be a collaborative process with the team and all the rest of it. But there we are. So I'm happy with those total hours. So I'm just going to check some of my charge rates here to align them to what they are for this contract. Because as you recall, when we put this in, we get our standard charge rates for our team. And what I'm doing is amending them to our charge rates that we have on this contract, which in this case are higher, which is nice. It's always nice to be able to charge more. So there we are. That's given me my estimate for this variation. I'm now going to go into the schedule view. I'm going to scroll down here. Here is, you know, this option for doing this. Now, and I know that's going to have started, let's say it starts next week, and it's 3 weeks worth of work. So it's going to go through to the 10th. And that's going to be weekly. And we hit save. So there we are. We've scheduled out that effort when everyone's working on it. And then I could take this and I could do the, you know, analysis of the, you know, time and resource leveling that we did last week, run reports to see, you know, do I actually have availability from these people in those weeks now that this has come up? What am I going to do? Now, the other thing I'm going to do is I'm essentially forecasting this now, is I know that there's been some effort done up here that relates down to that. So some of the actuals relate to this work that's been done already. So I'm just going to shave 8 hours off each of these guys to reflect the fact that there has been, you know, let's say about a week's worth of effort against everyone. So this extra effort everyone was doing. So I've shaved 40 hours off that. So we're going to be charging for it. But what I'm doing is taking into account the work that's been done already and having that go through and not be part of that forecast hours. So that will also communicate to them in their timesheets now to say, you know, you've got 52 remaining hours on this, not 60. So now that we've done that and we've changed all of this, I can come now into the earned value view, and we can see here that, you know, none of this has changed, but I can update this with the variation as well. So here it is, additional master plan options, and I assign my engineering design stage gate group to it and hit save. So that's assigned. And let's say all I'm happy to do at the moment is to say that we achieved setup, you know, at the start of this week, because we're certainly not at the point of it being draft or issue for review. There's still much more work that's done, but we have achieved some effort here. So I'm letting me have this effort. But because this isn't an approved variation, that it's worth nothing yet. So, but that's okay, we'll get there. So now I need to get this variation approved. So I go back into my value view, go down here to my variation, and I select new document. And I've got a couple of ones here. I'm just going to use this variation order here, create this document. Now, again, I'm going to show this to the client as a lump sum amount, right? So I'm going to hide this quantity unit rate. I'm not showing all the detail here against everyone. I'm only showing this line here. So I'm selecting what I want to appear in the document. Variation date, that's today. And then, you know, I would write a so there we are. I, you know, put in the information I would need to convince the client that we need this particular variation. I'm just going to skip a couple of steps here because there's some stuff that we don't need to use, but this is basically just a little sort of header thing. And we're going to go to here and change that to be a signed off, and I would email it out like I did with the invoice. So now, so we've now received an email back from Clive McClive, our infamous client here, approving this variation. So what I'm going to do here is I'm going to use my Save to Unify button to record this into Unify. So I'm going to save to Unify, and I'm going to select New Issue. And this gives me, you know, the description of it, which is, you know, variation approved. I'm going to find my project here, which is the largest cake decorating facility. Category here of client issues. Let's go with that. Assigned to myself as the project manager. Now, when I save an issue in here, it picks up this issue description from the subject of the email, but I'm actually going to change it here to be master plan options and hit save. And now when I click on that and drill through, I've got this issue here, and there's my email for this, but this isn't connected to that issue that we created in the contract. So I've got it here in my issues module, and I highly recommend you do our issues management training. And if you did our cost management training, we did a lot of stuff with variations and issues, and that you could use variations to track this from the beginning. So right when I saw that we're in meetings with, extra options being logged, I could have logged this issue then and started tracking the correspondence around it and built up the evidence that this was a variation to be able to include that in the document I then sent to say, this is what's happening, because the old thing about getting variations approved is you've got to have lots of evidence to convince the client that that's the case. In this case here, we managed to do that. That's all good. So now when I go into the contracts and drill back into my contract and go down to the issue and go across to my link here, which is into my comments. So there's my comment about all of this. And you'll see here, we've got this thing here for related issues. So I can link this variation to my issues module. And there's the issue. I hit save. And now suddenly we've got a whole lot more information. All right, I've got the my original comment. I've got the email from the client, and I could have even linked the document. I didn't do that in this case, but I could have had that document linked as well for that variation order or variation quotation that we sent out to the client that they've now approved. But the good news is it's now been approved. So before I update that, I'm just going to come back here to this project analysis report and hit view and see what's happening now. So things have changed. Here's our agreed revenue that hasn't changed, but our forecast final revenue has. It's now worth 77,000, taking into account this variation. Our forecast cost of completion has gone back up because we've put that extra effort in, and our percentage complete has gone down to 47% because we've increased the effort. So our actuals today haven't changed, but our effort has gone up. So that's decreased the percentage complete. Our total revenue earned has changed because our forecast final revenue has changed. And our WIP has gone back up because we haven't invoiced anything extra. Profit margin to date hasn't changed because that's still looking at what we've invoiced to date versus the revenue we've earned. The actual cost to date. But we're now back in the black, as it were, with our forecast profit margin by putting that variation in place. So the final piece of the puzzle is to say this variation is approved. So to do that, I'm back here at my variations and I change this status from pending to approved. I select save. And that's now changed that status. So if I go to my dashboard here, my original contract value is 43, approved variation of 34,000. That's flowed through. You can see here, this has also changed the graphs here. Original contract versus approved and how much have we claimed. Here's another relationship between the two. As you can see, there's a significant variation because they asked for, we originally scoped 2 master plan options, they asked for 3 more. So it was quite big here. So the graphs are all telling us that story as well. Drill in. Here we've looked at the value, and if I get my little summary of the value down the bottom here, that includes the variation. I go to there's nothing to change in my schedule view because we'd already scheduled this work, but I'm going to go to earn value. And let's hit save with this. let's just say we've hit draft here for this one. Ah, no, we haven't. I know what's happening here. Right. So there's one last thing that I just completely forgotten to do, which was that with the addition of the value of the variation, our baseline has changed. So I need to hit this rebaseline button, which changes the profile, as we can see here, the profile of our planned costs. We now have planned costs out in December. So we're looking at more than, 2 months. We're now looking at 3 months. And our earned value has changed as well. Because we've changed the planned value, we're now picking up, with that rebaselining, we're picking up the fact that we've earned some of this master planning options here. So that is now giving us a better picture of things. Here we are, we've earned slightly more than our actual cost. Now, again, that might be a little bit optimistic, but that's okay. It'll probably go down when timesheets are submitted for this week. And so we're basically on cost and on schedule, maybe slightly ahead. Now, you would expect that when you rebaseline. So that's okay. We've got to see how it performs from here on in. And then the final thing is to then look at this project analysis report again. And really the only change we're going to see here is that our agreed revenue and forecast final revenue has updated to be the same thing because the variation has been approved. So that's flowing through. So interesting though to compare 36,000 here in earned value with 34 in cost. So there, and again, they're not exactly the same. We would expect the earned value of the revenue to be higher because that includes our margin, whereas this is our cost. And that's the case here. So they're, probably telling us that things are about right. Okay. That's the end of that session. So that's taking through the whole scenario of, dealing with a cost overrun and being lucky enough to be able to get a variation to deal with it and get us from a situation where we were losing money on the project to where we're back making a margin that we feel we can live with. So thanks everyone for attending this training. I hope you've gotten something out of it.